All right, perfect. So we all got young kids. So Christmas is in full swing. So Spencer, what's the top Christmas list item in your household?
Well, we just spent the weekend at Opryland, so I am
Done. Christmas is
I'm
done.
done for Christmas. I didn't do any of the heavy lifting. Rebecca did that all for us. So fortunately, I'm not the one that have to answer that question.
That's nice. Because how old are all your kids?
Yeah.
What's their age?
So Natalie Grace is 10, Adley Catherine is 8, and Charlie turns 4 a couple days after Christmas. So Santa is alive and well.
That's big ages. Yeah, absolutely. What about you, Anthony? How old are your kids? They're specific ages?
6 and almost 4. So
okay.
They're it's
pretty much in here. So 7 and 4. So there's a list that's being built, but I don't feel like we have the pressure of like, here's what peers have that I want. Like Spencer, you probably have a little bit more of that where like so-and-so has this, I want this. Like they're not to that point where they're comparing what others have and what they would want. I don't know.
That's right. There's a lot of cool items that they have to have.
And multiples of the same one tend to be.
Right.
Yeah, that's true. That's true. What about you? What do you want for Christmas, Spencer?
Peace
and quiet on a Saturday afternoon.
Yes, I want a morning where I can sleep in. My house gets going about 5:45, 6. So if I go to bed at 9 p.m. or I go to bed at 11 p.m., I get to wake up at the same time. So just maybe to be able to sleep until 6:30. That's what I want for Christmas.
Heard that. What about you, Anthony?
Oh, I don't know. My kids don't get up till 7, which is kind of nice.
I'm gonna come stay with you.
Luxury. That's good. Well, for those that are listening, welcome back to the Retire While You Work podcast. I'm Carson Odom, joined by a couple of team members, Spencer Provow and Anthony Breen. Our purpose today is kind of diving into a little bit about the stock market, what the market's been doing. Last week, or the middle of December, whenever we get to post this episode, we had an economic webinar kind of posting economic updates, kind of left out the stock market, more focused on just what the economy is doing and what we're seeing as an investment committee as we're studying, getting ready for a rebalance in January. So wanted today to bring Spencer and Anthony here to kind of talk about the stock market as a whole and what we're seeing and what the market's done over this past year. All these headlines that we're seeing when it comes to AI and spending and CapEx and the whole data boom and energy. Just figured it'd be good to go over a few things. So I'm going to share some slides and then we'll be able to get started just kind of talking through it. So here on slide 1, Anthony, why don't you kind of kick us off with what we're seeing?
So I think, the theme of this year was after international underperforming for what seemed like a decade, finally had its due, outperform this year. And then still was a mega cap story with NASDAQ 100 being up the next most index, S&P a little bit below that, and then S&P equal weight a little bit below that. So, but I think what we're seeing recently is maybe a broadening out where the S&P equal weight is starting to outperform the market cap weight. So it'd be nice if in 2026 we had a broadening out, just because it's getting a little concentrated when 40% of the index is in the top 8 names. So.
Yeah, I mean, look at like back in April during Liberation Day, that broadening out felt good. When you have a diversified portfolio that wasn't Mag 7, I feel like in April it was like, okay, this is why it's working, only for it to stop working about June and so on this year. Not really not work, but just the fact that Mag 7 just took over yet again. And it's been a story year after year recently as own the Mag 7 or kind of get left behind.
And I think it's important to take a moment and appreciate where we are today. You mentioned Liberation Day. To sit back and think, if someone would have told us where we're going to be today in those first couple days of April, I think we'd all be doing backflips. It's kind of important. It goes back to, we as advisors sometimes get a hard time about telling our clients, hey, the best thing to do is nothing a lot of times. And I think the way this year has performed, since April is really, important to see that the data matches up to what we're saying a lot of times.
That's good. That's a great perspective. I don't know if it was Charlie Munger or Warren Buffett, but essentially the best investors aren't made in the buying and the selling, but they're made in the waiting. So essentially, just like you said, the best investor, if you sat on your hands during April, you were pleasantly paid off just by truly doing nothing, letting the market do its thing over the course of this year. It's hard. It doesn't mean it's going to be easy. Just like pulling the trigger and saying, okay, I'm going to buy a stock right now. There is also a very active decision of saying, I'm going to do nothing right now. I'm going to let it sit, let it do its thing. So, yeah, that's good.
Yeah, and so here's the chart. Well, a table of top performers, top and bottom performers in the SP 500 this year. And you'll see the theme is there's a lot of AI exposed names in doing really well, and then there's actually quite a few stocks that have not had a good year despite the indexes being up. So there's been a lot of dispersion underneath the covers of the index. And dispersion creates opportunity, but it's also just a reminder of why we stay diversified. It's really hard to know which stocks in advance are going to be the ones that do well next year, which ones are going to do poorly. But overall, I think it's definitely an opportunity to always go through those bottom performers and see if there's anything that makes sense to add to the portfolio. That's what I like to do. But you have to be very careful doing that, because if you do that every year, you'll just have a portfolio full of losers by like the 5th year of doing that. So
right. There's obviously
we only want you to pick winners. So
I try.
What's surprising here is that you would think, in this AI era over the past 2 or 3 years, at least the headlines would make you think that anything and everything AI related is doing well and positive. But I mean, just take Adobe, for example. It's in the top echelon of losers for the year. They've unveiled their AI portion of their PDF software, and I know with Photoshop and a bunch of other products. Just because you tag AI to your name or that you have a product that involves AI does not mean that you're just killing it in the stock market. That's what was surprising about seeing this data, which is healthy. I think that it's not just anyone who's throwing an AI tagline on their product or in their earnings call that their stock's going to go up. That means the market can see through kind of the BS or whatever that's involved with that.
Yeah, I think the market's really starting to differentiate between the different winners and losers of what's really going on. Whereas before it was just like whoever can have a press release with OpenAI's name in it will rally, but those days are already over. So, and then a key reason why we think next year will be like a good year for economic growth is the broadening out. It will be a little uptick in consumer spending is expected, partly because OB3 or one big beautiful bill did extend the tax cuts that existed, but they added a little bit extra tax relief for the middle class. Not a significant amount, but it is significant enough that this tax refund season, it's estimated to be 50% higher. So for a family that normally gets a tax refund of $3,000, they could get a tax refund of about $4,500 this April. And that the reason for that is it was passed in July, and the big like paychecks and ADP, they never adjusted their withholding, and so there will be a withholding adjustment on all the W2 earners paychecks on January 15th. So everyone should get a nice pay bump January 15th, which would maybe help consumer sentiment a little bit, because it's definitely even though the stock market's doing up, the average consumer is not feeling good right now.
I think I try to zone in my federal tax withholding to pretty much be flat whenever it's time to file my taxes. But I know whenever I was younger and I would get that big tax refund, you best believe I was spending, a tax refund. So I get it. Like anyone gets a bigger tax refund, that usually I would expect that that's going to end up dropping into consumer spending. So it's a good note.
And then this chart is interesting. So we were talking about how it was really only a couple months ago that it seemed like every single day there was a new OpenAI headline deal being made, and really was like the poster child was Oracle having a $300 billion cloud contract with OpenAI, and so Oracle sold $18 billion in bonds in September as part of that, and those bonds are already trading down. So Oracle it still has a investment grade BBB credit rating, but those bonds are now trading down as junk bonds. So you can see the yellow line, the yield required on those bonds has gone up, and now is yielding more, or the price of the bond is now under what the BB junk bond or below investment grade bonds are yielding. So this is just a good example of the market kind of recognizing that there are risks to this AI spending. It's not just like a magic money machine. And if you had told me in September that Oracle's, so as part of this is just how the bonds have done, the share price of Oracle has actually come in almost 50% just since mid-September. And if you'd told me mid-September Oracle's gonna be down 50% the next 2-3 months, where do you think the S&P will be? I would have said S&P will probably be down 10%, but the S&P is up 3% since then. So that's the beauty of, like, just stay in the market, stay invested, stay diversified.
Gives me confidence, like as an investor, to say that, okay, that Wall Street is vetting the AI deals and the AI profitability that's happening in the market right now. Like they saw through. Yes, it did. Oracle popped. I don't know what its net impact on stock price prior to this deal is, because obviously it was up a lot and then it was down a lot. But the street kind of saw through this. It's not just, magic deal with OpenAI. Now they're going to make a ton of money and share price is going to go up for years to come. They saw through it, and within 2 or 3 months, it's been reacted, and they've seen through this share, seen through this contract. So that gives me confidence that just people are understanding that what does it take to actually get a good deal.
Right. It's not the everything go up market right now. There's starting to have winners and losers, which is a healthy thing in the market.
Yeah. And I think the fears are like an overbuild cycle, like, and have stranded assets where, if we're going to spend trillions of dollars on AI data centers, should it be 3 trillion or 2 trillion or 1 trillion? Like, so it'd be a lot better if we only need to spend 1 trillion, that we spend 1 trillion, than spend 3, 4, 5, and then they're just sitting empty.
It's amazing the dollar amounts we're talking about here. It's just
wow.
It truly is. Yep. And how, I'm sure we'll get into this chart, and how you've got all these, I don't know if it's dozens at this point, deals that OpenAI is making. And it's basically like, where is all this money coming from? So now I know with like some Mag 7 companies, they obviously have bigger balance sheets to be able to fund data centers and build outs and whatnot. But as opposed to OpenAI, that doesn't necessarily have massive amounts of free cash flow yet to pour into this infrastructure.
So this chart, I don't know if you guys can see it very well, but basically it's Financial Times estimating what the balance sheet of OpenAI will look like currently, but also in the future. And you can see that they're expected to, lose quite a bit of money. So negative free cash flow looks like it's expected to be negative 50 billion for a couple years there before going back to break even, hopefully. And basically that negative 50 billion free cash flow has to be funded by new equity coming in. So when they say OpenAI is worth $500 billion, they need to sell a 10% stake worth $50 billion each year, or the money is not there.
So one would believe a public offering is going to happen in the coming years.
I would think so. It starts being a lot of money to raise in the private markets. So I think that's a good segue for our next slide. There could be a big year of IPOs in 2026. And the big news this past week is that SpaceX plans on IPOing in 2026. And so SpaceX has been, it's a 22-year-old company, 23-year-old company, founded in 2002. And it's the biggest private market company. And the valuation being discussed for the IPO is around 1.5 trillion, which would place it day one as a mega cap. And a huge, I think to put it in perspective, the Facebook IPO that we all remember in 2013 was only a $100 billion market cap when it came public.
Wow.
So, I don't know if you guys have any comments on the other companies on that list, but
SpaceX is going to suck up all the oxygen in the room for quite some time.
But I think by SpaceX going public, it could potentially bring some animal spirits and a resumption that the other private names want to go public too. So,
it'll set the precedent, that's for sure.
Yeah. So then, and OpenAI needs the capital too, and then I think Anthropic is discussing a 2026 IPO as well. That's the other AI company. And then this has become, I think 3 months ago, this was data centers in space was just pipe dreams, and everyone was like, "What are you? That's not a thing."
To me, it sounds like something like 50 years from now, not like 10.
Yeah, in the last month, I think it started to be taken very seriously, and now it's in people's plannings. And I think it's being cited as a main reason why SpaceX wants to go public after years of staying private.
God, this takes me back to my childhood days where I wanted to be an astronaut, starting to send stuff out into space.
It's crazy.
Love it.
Yeah, it really is crazy that the demand is there.
Back to our kids. Yeah, I think me and my wife and I, we say, our kids, you can do anything when you grow up, but you're not allowed to go to Mars. We don't want you going. That's
no space exploration yet.
No Mars. Yeah, no Mars colonizing. We want to be able to see you. But yeah, so there's now a chip that's been sent out to space, an NVIDIA chip that's doing some inferencing successfully, and it's being viewed as like a real possibility. And the reason why it's possible is because SpaceX's launch costs have just gotten so low. With the Starship, it's expected to get down to like $100 per kilogram to send things to space. And so Falcon 9 right now is like between $1,000 and $2,000 per kilogram. And I think, to put that in perspective, the space shuttle in 1981, if you wanted to send an experiment up there to tag along, it would cost you $50,000 per kilogram back then. So the cost of launching things into space has just gotten a lot cheaper all of a sudden. And so that's why launching satellites into space, like, Starlink, which is a big piece of SpaceX's value. They have almost 10,000 satellites up via Starlink.
That's hard for my mind to comprehend that there's 10,000 satellites in space right now.
It's wild. And then it would be, everyone's talking about gigawatt data centers. So I did the math on how many Starlink satellites to put a gigawatt of compute up in space, and it's 6,600 of them. So they've already done it before, and they just got to do it again, I guess. With they'll have to modify the satellite quite a bit, but it could happen. It could happen.
That's wild. Things I did not think that we'd be sitting here discussing is AI data centers floating around space.
Yeah, no, I think a month ago everyone was like, "That's not a thing," and now this white paper apparently has been out for a year, and here's the chart showing that they believe this is why they think it's going to be cheaper than on Earth. One of the key reasons is that if you're powering both with solar panels, there's orbits that you can do that get sun 24/7. So it's a lot more efficient there. And then the cost of sending something up to space is like $50 a kilogram. Suddenly that's like a rounding error for the size of these data centers. So I think the Hyperion data center in Louisiana that Meta's making is going to be like a little over 1 gigawatt at a price tag of $27 billion. So you can send a lot of satellites to space for $27 billion.
I mean, I guess cooling is not an issue anymore at all, or is it?
It's still an issue. You have to radiate the heat away, so it's actually still very much an issue. But it just uses a different technology to do it. But yeah, it is cold out there. The problem is it's a vacuum, so there's nothing to really conduct the heat away, so you have to radiate away.
Okay.
But yeah. So,
all right.
But it sounds like they think they solved it. So we'll see.
There we go. Okay.
So are we gonna sell real estate in space? Is there a way to monetize that?
I think it's first come, first serve. I don't think there's that's part of why it's cheaper too, is like you don't have to deal with regulatory purchasing land. And obviously I think as more farmland, more of the country's turned into data centers, there's starting to be a pushback on like how much do we really want? How many data centers do we want? So
right. It's pretty interesting. Bringing it back to the top just for a second, I think I don't think any of us, I don't know what y'all's opinion was, but if we had this 1 year ago, definitely wouldn't have predicted a chart like this, especially with the inclusion of Liberation Day. I think things looked fairly okay from an economic standpoint, market standpoint. You just never know the path that the market's going to take. But it'll be interesting to see how things round off next year if international can hold the way that it's done. I don't know the last time that international has outperformed the U.S. in back-to-back years. I'd have to go back and look at some data there to see what those numbers are like. Anthony, I don't know if you feel like you have
I do not have that off my head, but it's still, I think it's still cheaper. Even with this rally, it's still only about 18 times earnings, whereas the S&P is closer to 23 times forward earnings. So still cheaper, but I would say that the earnings, we're hoping that earnings growth broadens out next year and is not just Mag 7.
Mm-hmm. Yeah, that'll be the thing to see, is if the rest of the stock market can really do its thing and grow earnings like the Mag 7 have done over the past 2 or 3 years, really since post-COVID, and really since 2022, the Mag 7 have really done well growing earnings. And can the rest of the stock market grow earnings the next couple of years like they have? Yeah.
We'll find out.
We'll see. All right. Well, perfect. Well, thanks for joining us for another episode of the Retire While You Work podcast, and hope you have a great Christmas.
Thanks, guys.
Thank you.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.